Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, um, by the way, welcome back after a holiday, the Memorial Day weekend. We are in the middle of a holiday shortened week. And over the long weekend, I had some time to just contemplate where we've been. Memorial Day, obviously. No, I don't have any military members that served. Actually, I do have an uncle that served in Vietnam. So, for anybody with family or that themselves served, thank you very much for your service. And Memorial Day is the unofficial start of summer, and it's a time to really reflect on things. So for me, I was reflecting on the markets, and you may be wondering why I have this funny little graphic up on the screen today. And comes from a phenomenon in the 1990s, kind of the pet rock of the 1990s. I don't know if you remember it, but it was called the magic eye. And these optical illusion charts were really everywhere to be seen, or maybe not seen, depending on your perspective. But do you all remember these 3D images? If you stare at the image on your screen long enough, you'll eventually a 3D image will come into view. And boy, I remember the first time I saw this magic eye, and it took me forever for my eyes to relax in a way where I was able to see the image. But once I saw the image, it was really kind of fun, and so I was hooked and addicted to these magic eye images. What does that have to do with investing? Well, when I think about what we've been doing on an intraday basis in the Money Fortress, identifying arbitrage opportunities, really, I think about a magic eye kind of situation. I'm looking for patterns in the markets on a constant basis. Every single waking day, every trading day, I'm trying to identify certain patterns that we can exploit. Now, does that mean it's going to work every time? No, not in the least. But more times than not, it does work. And on average, we're generating 20 to 30 basis points on our trading in the Money Fortress, making these trades off of patterns that we identify and arbitrage opportunities that are created from the mismatch of pricing in the markets to the patterns that we're seeing, to the forecasts that we're seeing, to the macro data that we are analyzing. So it very much is similar to this magic eye. And to be honest, most people in the market don't see the 3D image. And it's fascinating for those that do see the patterns. And when you see those patterns, it's there's nothing to it. And I recall trying to convince a relative that there was a 3D image in this mishmash of a digital image, but they, for the life of them, they could not figure it out. So the market is can be very confounding in the same way. But fortunately, we do have the ability to see the 3D images. And the image that is working very, very well, and one I just have a high degree of confidence on right now, that's a lot of highs, is the S&P pattern here that I'm showing on my screen now. And I'm not sure if you see what I'm seeing here, but it's really simple. We started the year right around 6,000. Where are we today? Right around 6,000. That is a very important data point that has expressed itself over the last 5, now almost 6 months of trading. And going forward, what we can expect is more of the same as the market. Yes, will there be gyrations? Absolutely. But on an intraday basis, what makes this uh, pattern fascinating and exploitable, more importantly, is that um, on a daily basis, when the market is interpreting various data points, whether it be economic data, whether it be Trump tweets, or the Federal Reserve not doing anything on interest rates, whatever the case may be, the algorithms are reacting to it in real time. And that's creating pre-market futures trading that is very, very exploitable. So if you look at the SPX over the last 10 days, for example, you can see uh, weakness at the open and a spike, weakness at the open and a spike, weakness and a spike, weakness and a spike. Now, today, by the way, today is one of those days where the pattern did not work. We didn't trade the pattern because today's action was very, very unique to Trump walking back his tariff threats against Europe and creating a situation where the market actually had it right this morning and gains actually accelerated throughout the day, especially on the NASDAQ. So what we did instead is we found an arbitrage opportunity in volatility, but I digress. I can explain that trade in another video. But I really think it's just a great setup right now that, similar to the magic eye, there's an image within the image. And for me, that is a market that has a strong gravitational pull to this flat line here, right? There isn't going to be, at the end of the year, I'm pretty sure most uh, economists, market forecasters, et cetera, are projecting gains for the S&P maybe at 5%, right? And so this flatline magnet, right, on a daily basis, you're going to have futures here, you're going to have futures below. And anytime I get a disparity between futures and that flat line, I want to pounce in a contrarian way. And like I said, that setup has been working very, very, very well in the month of May, where I would argue, I think we're up now month to date 5.5%. And that is lagging the overall market. But keep in mind, we're only exposed to the market maybe for 30 to 60 minutes at a time. And that lack of exposure to the market, the way I look at things, is a way to reduce risk. So identify the pattern, flatline trading, deviations against that flat line, and exploit on a contrarian basis. Do that each and every day. You too can be generating 20 to 30 basis points on average, just like we're doing here in the Money Fortress. That's all I have for today, folks. This is JD for The Rational Trader. I'll be back tomorrow with another video. And take care. Have a great day, and we'll see you next time.